Take a look at futures this morning. Right now, as you can see, we are off to a little bit of a rough start. Dow is down 205, S&P down 43, NASDAQ down 223. We did have an impressive rally on Friday. All three major indices up more than 0.5%, shrugging off a CME outage, of course, that hit that morning. The NASDAQ still seeing a loss of 1.5% for November, though. A lot of this is about worries over an AI bubble. Is that happening? Other rallies boosted market sentiment. Commodities jumping over dovish Fed remarks and a supply squeeze. Silver topping $55 per troy ounce Friday. Gold is up this morning. We're above 4,200 there. I want to bring in Crossmark Chief Market Strategist Victoria Fernandez. Victoria, what is your reaction to what we are seeing? We did see, of course, that slide in tech, the worries about AI for November. But here we go for the final month of the year, and it has been an incredible year for the markets.
It really has, Cheryl, and I don't think we should be surprised that we saw a little bit of a correction over the last few weeks. It's very typical in a market where you have breadth that was deteriorating, which is what we saw. We were really just being led by the tech names, and you combine that with a very bullish sentiment that we were feeling in the marketplace. That actually usually leads to some type of a 5 to 7% correction, which is exactly what we saw. So not surprised that that happened as things got a little bit stretched, but maybe we're at a better reset here now. We're starting to see breadth come back a little bit. We're starting to see the consumer discretionary names, that relative trend start to turn around and be positive again. So there are some elements here that say maybe we just had a good reset and we're ready to start seeing the market move a little bit higher. It doesn't mean concerns are completely gone, whether it's geopolitical, whether it's an AI bubble concerns around the Fed. Those are all still there, but it seems like right now it's a little bit more of a risk on market maybe going into year end. And this is just a little bit of regular correction that we're seeing.
Brian Payne, jump in here, because you've said that the concerns about the AI trade are overblown. There's plenty of sectors that we could be looking at in this space right now.
Yeah, I mean, I think the AI is probably warranted to some extent, but Victoria, I like the word reset, because I think what you're seeing right now is, number one, sentiment has gotten completely negative again, which is a bullish sign. We know we have a Fed that's probably hell-bent on cutting interest rates this year and probably again next year, which is very stimulative. And what I really like is that over the last month, you've seen this rally broaden out, right? Healthcare stocks up 7%. They've kind of been not a great place to be for a long time. You've seen the same thing with material stock, financial stock. So it's kind of heartening for me to see the fact that money is spreading out beyond the AI trade, which the media just can't stop talking about it. I'm bored of talking about the AI trade. What are your thoughts?
Yeah, you know, there's a lot of concern around this AI bubble, and a lot of it because of the CapEx component that we're seeing. I mean, JP Morgan said they've already seen $7 trillion in bond issuance related to CapEx. So I think there's a reason that people are concerned. A lot of these kind of circular financing elements that we're hearing about, there is reason to say, how is this money going to come about? Where are these funds coming from? We know NVIDIA has strong cash flow, but some of the others, we're not seeing the cash available to do that. So there is valid concerns there, and it's why we're not seeing the tech sector respond like we are seeing some of the others. But I do think you have to look in other areas. Look at commodities. I mean, I know, Cheryl, you were talking about silver a little bit earlier, but you're seeing copper break out. You're seeing aluminum about to do the same thing. Steel has turned around. Zinc is turning around. So there's things you can look at there. Housing has actually started to turn around a little bit. And healthcare, as you were just mentioning, that's where we've seen a big move. We're not seeing it in staples across the board right now, which, you know, that would be a warning sign to us if all of the staples started to do well. But the value, the Russell 1000 Value Index hit a new high before the growth index did. So I still think that's telling us people are being a little bit cautious, but there is an underlying risk on element here.
Liz Peek, jump in here.
So I think the broadening out of the market is warranted by the fact that earnings have been pretty strong across sectors, and that's really been a pretty good focus for investors. Looking at next year, it seems to me there are a lot of catalysts for upgraded economic forecasts, including the amount of money that companies and countries have said that they will invest in the United States in the next year or 2 years. What do you think about that? Is that part of your calculus on looking at next year?
Well, I think, Liz, you're spot on when you talk about earnings. It has really been what has driven all of this. You look at AI and the tech companies, we wouldn't continue to see those stocks move higher if earnings weren't being supportive of the valuations that we're seeing. And we're actually seeing earnings expectations move higher into next year. And some of that is because of the things that you mentioned. You think of the One Big Beautiful Bill, the stimulus that's coming from that. You think of the CapEx that's coming not just from tech, but from other companies in regards to being able to expense some of their R&D and some of their CapEx. That's going to be positive coming in. We should have an influx of cash if those deals stand firm, and we see that come in for more building and industrial elements here in the U.S. And let's not forget, I know some people want to just swipe it under the rug, but we do have the World Cup coming. There's expectations that that can be $17 billion coming in to our economy as well. So there's lots of things that are adding to the idea that next year can be better. But I do think we have to keep a watch on the labor market. The Warren survey is telling us layoffs could increase. That could be a wrinkle in this system.
No, the World Cup, I agree. I'm glad you brought that up because that is going to be an incredible boost for the U.S. economy. I agree with you on that. Real quick, I want to take a look at yields. Futures traders are pricing in about an 87% chance the Fed cuts rates quarter point this month. President Trump said he has now made a decision on who's going to replace Fed Chair Jerome Powell next year. He was on Air Force One last night. Watch this.
Picking a new Fed chair, are you any closer on that right now?
I know who I'm going to pick. Yeah.
Is it Kevin Hassett?
I'm not telling you. We'll be announcing it.
Was it Kevin Hassett? Well, Kevin Hassett telling Fox Business he'd be happy to serve if chosen by the president. Maria asked Mr. Hassett about that role just last week. Watch this.
We know that you were on the short list to become potentially the next chairman of the Federal Reserve. When do you expect the president to tell us who he's chosen for the next chairman of the Fed job?
I think that the president is expecting to interview final candidates sometime over the next couple of months, and then we'll probably have a decision sometime soon around the new year. It could be tomorrow.
Or Victoria, he's already made his decision, according to President Trump.
Yeah, and look, it wouldn't surprise me if Hassett is the person he nominates. He trusts him. He has some history with him. I think the thing to remember here is that we do have this huge expectations of more Fed cuts coming in, especially after Fed Williams about a week ago talked about another cut in the near term. So a new Fed chair coming in that continues to reiterate that story probably won't cause a lot of waves. What's going to matter is if we see inflation expectations start to get higher. And so you would probably want to hold yields a little bit, hold rates. That's when the question comes in as to who the new chair will be, and will they push lower rates even if the market maybe isn't calling for it. For now, I think whoever comes in will have a good place to walk in with the expectation that rates will move lower anyway.
Yeah, well, we shall see soon enough on both fronts, Victoria. Victoria Fernandez, great to see you. Thank you.
My pleasure.
All right, we'll be right back, everybody.